You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again to view some volatility. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And no matter how you like to consume your volatility content, we've got you covered. If you're really hardcore, you want to get it live, you want to listen to it the second it comes out of our microphones here, then of course you can check us out via Mixlr every Friday, noon Central, 1 p.m. Eastern. Grab that link, you know where to find it by now. All of our various social media accounts, our website, our newsletter, and so on and so forth. Grab it once, set it and forget it. Follow us in Mixlr if you want to get notified the second we go live, not just with this show, but all of our shows throughout the week. So that one link, grab it, set it and forget it, and you're good. If you want to take a deep dive, or you just want to listen to it as it comes out on your own schedule, you want to get it delivered to you via your device of choice, and of course, subscribe on your platform of choice, your iTunes, your Google Podcasts, all that fun stuff. If you want to take a deep dive, though, into the archives, maybe you're just discovering the show. So first off, welcome. Secondly, it's been a while. Glad you could finally join us. But we have a great archive, great guests, great discussions going back many years on this program. The easiest place to do all that, of course, is our website, or indeed via our mobile app, where we don't gate you on how many episodes you can look at a time. Just go dive into your heart's content. Go to the VolViews landing page, type in a search term, see what you're looking for. Chances are it's going to come up there in one of those archive episodes, and you could have yourself a little bit nice trip down the volatility memory lane. Of course, however you listen live after the fact, or if you go way back into the archives, make sure you hit us up. Questions, comments, insights, pearls of volatility wisdom. We do indeed like to hear from all you folks out there. And joining me on the Volatility Views panel, my cohort, my partner in all things volatility crime, the greasy meatball himself, Mr. Mark Sebastian from Option Pit by way of Carmeline Capital. Mr. Meatball, welcome back to the program, sir.
Hey, good to be here. And you left off best friend and hero.
Yes,
and when you were
inspiration for all of my activities, moral center of my life, all these things.
Yes, moral center. I like that. You're the moral compass of volatility views.
Yes, that would be indeed be a interesting thing if that were indeed the case. Just a terrifying prospect, left and right. And speaking of terrifying, we don't want to terrify him any further. We have a great guest waiting in the rings, so let's not scare him anymore. Let's get right to it. It's time for our volatility viewpoint.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
Love that drop there. Always makes me want to go listen to some Dire Straits after that one. It always gets me fired up. Welcome to the Vol Viewpoint. This is, of course, the portion of the show where we welcome on guests from throughout the world of volatility, trading, and trending, and analysis, and research, and proceed to pick their brains for the benefit of you, the listener. Joining us today in the hot seat is John Molchan. He is a portfolio manager over there at Horizons ETF Management. John, welcome to the Volatility Views program.
It's great to be here. Thank you.
And John, you and I sat down for a little quick hit on our network a few months back. Back in January, I believe it was, at the Inside ETFs conference. Seems like a lifetime ago because quite a bit has changed in the market since you and I chatted. But it was a very quick hit. We kind of just a little sit down on our interview program. So for those of our listeners of this program who may have missed that, why don't you go ahead and recap that for us? Give us a quick overview of your background in the options and derivatives world and what the heck it is that you do over there at Horizons.
Sure. So my background, I have been in the business for about 15 years. Prior to Horizons, which is a wholly owned ETF entity of a larger Murray Asset Global, I was at SAC Capital and Millennium Management, focused on long-short equity, and also the use of various derivatives to include options and the liquid listed equity space.
Yes, one of the reasons you and I sat down back at Inside ETFs, it wasn't exactly overflowing with ETF options providers or analysts or funds that do a lot on the option space, which is one of the reasons why you're joining us today, because you guys at Horizons have quite an offering on that spectrum. Why don't you run down what exactly it is that you guys do? What are some of the ETFs you guys provide, and what do they offer?
Sure. So we launched our first one, which is the flagship ETF. It's a at-the-money monthly covered call on the NASDAQ 100. We entered the ETF space in late 2013. Our view was that there's a lot of value add in using options, and perhaps the absence of options in ETFs could partially be due to lack of understanding or education on the space. And so we saw a great opportunity to bring those types of products out. Right now we have two covered call products. One is the QILD on the NASDAQ 100. One is called HSPX, and that's on the S&P 500. We also recently launched a collar strategy on the Russell 1000. And we are looking forward to rolling out a few more options-based products in the coming year as well.
Yeah, when you mentioned that, the lack of education and just awareness of the option space in a lot of the ETF world, a lot of people may think that's crazy. It's 2018. Everyone gets these things. Certainly in our audience, they do. We speak to the choir a little bit here. But you're right. When I was down at that conference, it was kind of eye-opening to me. Just how, shall we say, passive everyone has become in the ETF world. It's kind of hard to blame them. That's where 80% of the fund flows is going, something along those lines, just to straight old school passive ETFs that ride the index up. And guess what they're going to do? They're going to ride it right back down again. So it isn't maybe surprising, even if it is a little bit alarming, that the space is somewhat nascent out there when it comes to overall volatility products. Now, your covered call, just to clarify, your covered call ETFs, these are straight up at the money buy rights, right? You're not doing anything like a 25 delta or anything like that?
So all of the underlying indexes were existing SIBO indexes. So QILD is tracking the BXN, which we later modified to it's now the BXNT index. That is at the money on a monthly basis. HSBX tracks the BXY, which is the monthly 2%. And then the collar strategy on USDY is the strikes are monthly, but they're determined by a proprietary algorithm. So they can vary from 3+% on the short call. The put that we're buying is probably anywhere from 4.5 to further out.
And I'm assuming the goal for the collar fund is to replicate some sort of costless or as close as you can get type collar?
as close to costless as we are able to, but without ever spending money. And that's actually proven well. That strategy launched on Valentine's Day. So we started to see some pretty material swings in the market, and it did exactly what we want it to do, where it's really minimizing the downside participation, but we're not paying for that protection.
It's interesting. You bring up, obviously, a lot has gone on since you and I sat down back in mid to late January, I believe, including the big, shall we call it, turmoil, upheaval of February 5th and February 6th. We saw, obviously, the S&P sell off somewhere around 4%, VIX rocket up to 40, somewhere in that range. So it was quite a tumultuous time, certainly an interesting time to be doing a covered call strategy, also an interesting time to be doing a collar. You kind of mentioned a little bit there. But it sounds like overall things haven't been too terrible for you. Walk us through what the last couple of months have been like with this general, upheaval in the market, the relatively quick return of volatility from that single-digit paradigm we were in last year to nice mid-teens or so up into the 20s range paradigm we're in these days. Walk us through what that's like for you guys, what it has been like for you guys over there at Horizons in the last few months.
So the covered call nature, obviously, this is great. Last year was the levels on the VIX and the VXN were baffling, I think is a good word. If you were to look at any trailing time frame of an average level, we were pretty much consistently below that. So on the covered call products, this new era of elevated vol has been terrific. If you were to look at the forward yields on the covered call products, QILD had an annualized div last year of 8%. So far, we're on a run rate for 12% this year. And what's great about that is both the S&P and the NASDAQ covered calls, you're still benefiting from all the underlying equity exposure. But as people start to get slightly concerned, they haven't seen volatility in so long. These are great strategies where you can benefit from, three different things. You still maintain your equity exposure. You're increasing a monthly dividend by nearly a third. And you also have, that measure of downside protection because we're bringing in more premium. So we have a little bit more protection when the market starts to short circuit and sell off, 5% in a few days.
And what has been the response from the clientele out there? And I know when we talked back in January, you said people were, starting to embrace the concept of these covered call type products. Now, of course, you can add the collar in there as well. But in general, when you approach people from the beginning with an options-oriented product, you're already kind of coming at them from left field. So maybe they're a little bit hesitant to begin with. And then all of a sudden, you add in these turbulent markets and you're telling them you're going to be selling covered calls, aka short puts, and doing things like this. Has that caused a little bit of trepidation with the clientele, or has it been the opposite? Like you said, just in general, the raw yield from the increased volatility, has that been enough to lure them to the dark side, quote unquote?
I think that there's a few things. There's always going to be people looking for income. That is, in its true sense, what an options-based ETF sourcing, the income from volatility, that's what makes it different. Other ETFs out there, they may use REITs, MLPs, traditional fixed income type vehicles. We don't need to mess with any of that. I think that is something that people have, really welcomed in that it's a way to diversify the income component of any portfolio, but it's also improving or enhancing the risk-adjusted profile of it. And to kind of tag on to what you had said before, you can, in a market that just melts higher, just continues to move higher, you can buy something for a couple of basis points and stay long. But when we see what we've seen through, say, the first 4 months of this year, now maybe it's a time to sit back and reflect on where do I really need to be positioned given that the market environment is shifting. And I think that in itself is where, current investors or targeted investors, the conversations are kind of going in that direction. I've yet to meet anyone who 100% of the time can correctly time when to sell and when to re-enter a market. So our products are.
Well, let me say it's nice to finally meet you. It's great you finally met the man that can perfectly time both sides of the market. No, I'm kidding. You're 100% right. I just wanted to. That was such a good joke, but if only we had a live studio audience.
We need a laugh track or a rim shot for you there.
Exactly. All right, sorry, didn't mean to interrupt. Keep going.
No, that's fine. I mean, you could have, $100 in the queues, and that's great until it's not. So the benefit of these is that you can still get that, transparent, full replication of the underlying index, but now you can still participate in the market without having to worry about capturing all of the moves. I think that is what people are really starting to appreciate when they look at these strategies. And then, Mark, it's funny, when we were down there, we were talking about long-only vanilla index products. That's not what we focus on. And we were talking about these fee wars. If they continue this way, maybe in a year they'll be paying people to own their ETFs. If you were to think about the costs associated with doing a monthly buy right versus a 60 basis point management fee, it is so much more cost effective if you need the income or you want to do a covered call or you want a collar to just buy the ETF than trying to do it on your own. And I given people's time, given people's knowledge of the options markets, I think, we kind of take all of the heavy lifting out of the equation, and given the monthly dividend, you're almost getting back your entire annual fee month one in owning ours instead of trying to do it on your own.
That's interesting you mentioned that, because it definitely seems to be two camps for that. For a lot of the super active retail, those guys like to roll their own. They like to go out there and they're going to write their own calls, and they're going to do it whatever their proprietary formula is, 2.5% out of the money, in the money, whatever the heck their flavor of the month is. But for a lot of the asset managers that we talk to in RIAs, those kind of guys, they like that nice structured wrapped together type product that does it all for them, because a lot of them, the number one complaint they have about doing options, writing calls every week or month or whatever, they just don't have the time. They have a bunch of SMAs or other things like that, or they have a bunch of big funds they need to manage, and they don't really have time to individually roll and calculate. So something like you guys are doing, which is either straight up at the money or maybe playing with the deltas a little bit and doing the collar, those types of things that they could kind of reliably set and not forget, but at least not have to manage on a day-to-day basis. That, I think, is appealing to that clientele. And it sounds like it is for you guys, so well done.
Thank you.
All right, and since we're talking all things volatility and changes of regimes and everything else like that, Jonathan has graciously, or perhaps foolishly, we shall see, volunteered to stay with us for the rest of the show. So let's get into it and dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down the week that was and indeed still is from volatility trading and trending and analysis and unusual activity and all sorts of perspectives. We are, like I said, recording this and streaming it live right around 20 after 12 or so here in the one true time zone, the central time zone here. And as we're doing this, the market's kind of digesting that GDP announcement and some other developments this morning, and in a generally bullish, slightly bullish sentiment here, right about midway, close to midway through the show. Most of the major indices up slightly, fractionally, percentage-wise, 0.25%, 0.3%, somewhere along that range out there today. And of course, VIX Cash relaxing, taking a nice little break, right around 15.75, off about half a handle, as we're close to halfway through the show. So let's just take a quick peek before we get there. Where was I last week? Oh, I was 16.35. Mr. Meatball, you were 14.25. So right now I'm leading. Actually, our guest, wow, he was spot on. Mike Thompson, the Thompson twins, was 15.85. So if it closed right here, he would be pretty much a bullseye. Within a tenth of a point, I give you that as a bullseye. So right now, fortunately, he's not here to collect his prize. Anyway, plus the show's not over, and we all know what can happen with about a half an hour to 40 minutes in the vol space. But that said, Mr. Meatball, has been an interesting morning so far. I know you were excited to watch your GDP numbers, being the big macro fan that you are out there these days. What's been catching your eye in today's and indeed this week's volatility developments?
Just the craziness in kind of how we dropped. We went up and down, but I will say that we had a higher low in SPX and VIX, even on that at the very bottom of things on, I want to say Tuesday, didn't even threaten 20. Just a total lack of fear. So I continue to see this pattern of cycling out of the February disaster. And that's kind of the way the pattern lines up for me.
You think it's all in the rearview mirror, huh? It's all warm, rosy sailing ahead for us?
I don't know if I'd say that, but I do think things are getting better.
I'm putting words in your mouth. Just go along with me. It's good. You're such an optimistic, bullish fellow that I wanted to just take that to the next level. You, after all, are the moral center here of our show. Jonathan, same question for you. It's been an interesting week from a volatility perspective. What has been catching your eye out there so far this week?
I think that's even a continuation in today's session would be the divergence between the VIX and the VXN. GDP, if you look at the summary table, from economic standpoint, would be very optimistic still on technology, given the services breakout, the intellectual property breakout. Had some very good earnings reports this morning, and you still kind of see a market that doesn't have really that much strength on it, but you see the VXN today up about 5%, and the VIX is down 3%. I think for the week, the VXN's partially up, and the VIX is down about 6%. So it'd be interesting to see how, the NASDAQ and the S&P kind of cohabitate in this market now that, I agree with Mark. I think most of the fireworks are over.
It's funny you mentioned VXN. Obviously, that one's near and dear to your heart. You guys are writing at the money buy rights out there in NASDAQ land, so a higher VXN is a good thing for business. Not one that we rotate onto the show very often, even though we probably should more, because you're right. Every week it seems like the narrative is the same. The S&P move is probably somewhat muted, or perhaps it's actually a little bit of the Goldilocks is in between, or maybe lagging behind some of the others. But the NASDAQ is always rocking and rolling, always moving. So the vol out there has been much higher of late. So certainly for a lot of our audience, it's an interesting one. The challenge for a lot of our listeners, of course, VXN itself doesn't have any options on, but you can, of course, go out to a lot of other NASDAQ products and write those options there if you are indeed so inclined. Mark, I know you like to watch a lot of the different spreads between the products, the Russell and the NASDAQ versus VIX. Has this one kind of been on your radar as well, kind of the increasing disassociation between VXN and VIX?
Well, I think it shouldn't be surprising at all, right? Apple's chart. Look at a chart of Apple. It's a dumpster fire. It looks terrible. Meanwhile, Amazon is rallying as much as 13% overnight. From open to open, it was up $170. It's now only up 130. Oh, bless my soul. You've got Facebook blowing things up on the upside, Google getting smoked. So if you look, the NASDAQ is so top heavy, right? You've got Amazon, Microsoft, Apple, Google, and Facebook that make up like almost 40% of the index just by themselves, something close to that. And, Apple is blowing up. Apple vol is at the highest it's been all year, and I want to say, the highest it's been in a couple of years. In fact, it is the highest it's been in a couple of years, minus a couple of other little spikes. So things look kind of ugly so there's a reason why VXN is doing what it's doing. I think you'll see it come down after Apple earnings a little bit, or a decent amount. Apple dropping, is about what, 11, 12% of the index. Apple vol dropping to, back to 25 will pull, a few points out of it on its own.
Yeah, it's interesting. In fact, spoiler alert, maybe if we have time to get to it a little bit later, I think we have a listener question about Apple vol, a.k.a. the old Apple VIX. So we'll see if we have time to get to that one. John, it's an interesting question. You obviously mentioned, you watch a lot of VXN and, of course, VIX. What else goes into your recipe of volatility analysis, if you will, in terms of, do you watch the VIX futures, the term structure out there, some of the ETPs like VXX? What goes into the analysis suite for you guys over there at Horizons? You're trying to break down volatility. You're just doing straight up at the money straddle runs in the SPX. What's your flavor of choice?
So the two covered calls are pretty straightforward. The collar, there's a little bit more that's going into it. The end goal or objective is trying to identify where we stand in the current relationship between implied vol and realized vol in the S&P relative to the band's trailing performance on the index. And the key there, it's imperfect, but it's close, where we're trying to identify where is the tail risk if we were to own this index, and just take out that, the average of the 5% worst daily distributions over the trailing time frame. And it gets a little bit more fun after that's done, because then we, can try and start looking at the calls and see where we can identify some mispricing, so that we're giving ourselves not just, the downside protection at a reasonable level, but that we're also, getting as much juice for the squeeze on the short call, with highest probability of hopefully going out worthless.
This is why I like having guests on the show, because everyone looks at volatility a little bit differently. Everyone has their own flavor, their own scans, their own recipes that they run. So it's always interesting for me to kind of dive into that a little bit. Really quickly, since you're talking about the collar before we move on, it's just always an interesting subject with me, how people structure these types of things. Obviously, you mentioned the cost list, and that there's a benefit to that for a sales perspective, if nothing else, in terms of people like the idea, hey, I'm getting free protection. Obviously, the strike selection there's not going to be ideal then, because you have to kind of line up the two contracts. Have you guys looked into, or maybe are you exploring down the road the notion of maybe, there's a lot of data that points to somewhere around, let's say, that 6-month time frame for the put being kind of optimal from a buying perspective. Then, of course, writing the calls, as active as you want to get, at least the front month, if not in the weeklies. Have you guys explored playing around with that structure a little bit to kind of maximize the theta on both ends, or is it more of the costless is just easy, people wrap their heads around, so it's as much of a sales boost as it is a performance thing, so you want to focus on that?
Well, given the nature of the ETF industry, marrying the durations, I think the easier explanation for, individuals who may not have ever even heard this term before. We are always looking into variations of strategies, and if and get something more out of the same exercise. So the 6-month could be something down the road. Multiple expiries could be something that could be married into this. It is an active fund. But I think where it's really adding the most value for, somebody at home who just wants some sort of downside protection or a hedge, is that you can look at it one of two ways. You can buy a product that's either short the market or, constantly carrying the burden of paying for a hedge. We're not doing either of that. And, more importantly, by the time everybody's talking about the market selling off, vol is high, well, then it doesn't make any sense to go out and spend 5 times more money to buy protection on the low. So we're not trying to time when is the next, financial crisis. This is more, you can sleep easy at night knowing that if something does happen, we're going to make money.
Yeah, I'm kind of with you on that. It's really, I could imagine already just explaining people the collar aspect, costless or not. Then he starts playing with the expirations a little bit. It probably would be a little bit overwhelming for the lion's share of the audience out there. So maybe the audience not quite ready for an optimal collar strategy. And you're right, there would be rolling built into that put and things like that. So not entirely set it and forget it, but still, there's ways you can play with that, obviously. But the audience probably not quite there yet. But, let's move on to some of the other products out there. We keep an eye on. Obviously, you mentioned the futures. They're coming in quite a bit as well, off about half a handle out there right now. Seeing about exactly a point between the cash and that front May contract, and about a point in the third or so between the cash and that June contract. So all of you out there, again, I think we have some listener questions about the contango later as well. All of you looking for that nice, healthy contango, it is back, at least for the time being, barring any sort of aberrant tweet or explosion of war in the Middle East or any sort of other things that could drive us backward in a heartbeat. Right now, at least, that nice, steady contango is back in the VIX future, so all of you can rest easy. In terms of the VIX options, what's been lighting it up out there this week? Today, the GDP number is not really moving the needle from an overall VIX options volume capacity. We're at about 375,000 contracts, so just slightly more than a third of the ADV, which is right around 950,000 contracts a day out there. About 4-to-1 today, calls over puts. It's been a pretty light week overall. Actually, every day this week has been below that ADV. The busiest day was yesterday with about 673,000. 611 on Wednesday, 529,000 on Tuesday. And a nice 275,000, pretty anemic there on Monday. We're still hovering right around that same about 2.6 to 1 call to put. It's kind of been unched for the last couple of weeks, which is kind of interesting. It was at or around historic lows of around 2.2 to 1 or so out there. Then we kind of bounced off that. Now we're hovering at that 2.6 to 1 level for all of you out there. I know you're out there who like to keep track of such things. Moving on to where the big money is playing out there in VIX land these days. Our top 10 hot VIX options strikes, the big positions out there. Things are OI's a little bit quiet right now, so the positions are a little bit smaller. Usually we see 450, 500, 600 plus thousand for the number one spot. This week, less than 250,000. We got 223,000 taking up our number one spot. The May 20s out there. Number two, the first put on our list, the May 17s. Seems like there's a bit of a push-pull between the 17 and the 15 strike in terms of which ones people like on the put side this week. It's the 17s, 183,000 of those. Number three, the May 75s, 375s. 37 halves, easy for me to say. Either way, very optimistic out there. 178,000 of those in the number three spot. Number four, the May 25s, 168,000. Number five, the May 21s, about $1.56 open there. Number six, May 22 is about 153,000. Number seven, the second and last put on our list, the aforementioned 15 strike. This time coming in June, not in May. The first June on our list, the June 15 puts doing about 152,000 contracts out there. Number eight, the June 20s doing 118,000. Number nine, the June 37 halves. Again, that 37 half strike is a popular one. 115,000 contracts there. Round out the top 10. The ever not quite optimistic June 15s doing about 110,000 contracts total of about 7 million, a little over 7 million, about 1.9 million on the puts and about 5.1 million on the calls. Mr. Meatball, it's been an interesting week out there, if a somewhat mild week from a VIX options volume perspective. Anything really catching your eye out there from a VIX options activity perspective this week?
Yeah, we saw this trade twice, and it was kind of interesting. This is there were a bunch of different trades this way and that, but a customer did this on two separate days, different pricing, but they sold the May 19 puts and the May 22 calls 10,000 times twice to buy 20,000 of the May 17 puts and buy 20,000 of the May 27 calls. Kind of making like a down back ratio and an up back ratio. Paid a little bit both times, but just kind of a really oddball trade. It's a trade that's kind of really looking for either, looking for some sort of outlier move, higher or lower. I thought that trade was kind of fascinating.
Kind of like a funky ratio iron condor almost.
Yeah, that's exactly what it is. An iron condor with kickers. So, it's someone who thinks either it's going to sit, but if they're wrong, they're going to be really wrong.
Really,
they're not
really wrong.
yeah, really, 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 really wrong. It's maybe an interesting way to set up a hedge. I could absolutely see that as, kind of a smarter way of doing the collar, right? We saw customers that were selling put and doing the back ratio. Well, with the VIX this high, maybe you'd want to have extra 17 puts. This way, if VIX settles, below 15, the guy's not completely eating it like he would be if he had just sold the put or even done the put spread.
Yeah, it has been fascinating to watch. For how long on the show was it pretty much just the short 1x2 was the trade du jour, and everybody and their mother was doing that. And then go figure, that one kind of went away last year, and now we're seeing all these other little nuanced approaches to how people are trying to make their way in the VIX space these days. We've been talking a lot about some other interesting stuff, like selling some funky strangles. I think we got some going up this week, just looking at some of the paper that was going up out there this week. Today, it's been kind of a weird week. Today, the biggest trade going up today was actually the June 20 call. Someone selling about 24,000 of those, so a pretty light day doing those for, looks like about $1.35. So not a lot of straight up funky paper hitting the tape today. Yesterday, the biggest trade again was kind of, it looks like an opening, or maybe not opening because there's a lot of paper out there, but doing about 36,000 of the May 24s out there. Also looks like selling those bad boys about 36,000 times. So upside call sales coming in again. Those could both be closing because, like everything in VIX land, there's a healthy OI in just about every relevant strike out there. Also of note, you mentioned kind of that funky ratio iron condor out there, Mark. We saw funky kind of, not ratio, just a straight up, looks like a strangle, maybe a bit of a risk reversal going up out there on Wednesday. It was the May 27, 17. Again, this could have been part of our friend's trade, or it could have been part of maybe someone following suit and deciding, hey, I like that one. let's just do the outside leg of it instead, one by one, doing it 19,500 times out there on those. Both of those could be closing because there's size OI in the six figures on each of those strikes. So hey, maybe that was piling on activity, Mark, or maybe that was someone, like we see it a lot in VIX land, someone just got expired by that funky ratio condor and said, I like that, but forget the ratio, and I'm just going to sell the strangle. So
yeah, we definitely saw a lot of strangle selling, and when we were at our peak, you do start seeing some things that make you think. You can almost tell when these sell-offs are over, because you start seeing all these call sellers and guys buying downside puts, or doing collars the other way, and it's pretty unbelievable. The way the VIX guys are able to time this stuff, and it's pretty impressive.
They are a savvy bunch out there. Speaking of savvy bunch, the flow master, Mr. Henry Schwartz, lurking in our live chat there. He's the keeper of the data, and he's chiming in saying, and also an interesting fact for VIX options, the total call OI is now almost 1 million contracts below where it was exactly this time last year. So that's kind of interesting. In and of itself, we're in a much higher volatility regime than we were this time last year. So maybe some of that whipsawing effect wiped out some of those higher strikes, and we haven't really replaced them yet. But still, given the fact that we were headed in a straight downward trajectory last year, the fact that calls outpacing where they are right now by about 1 million contracts, kind of surprising, Mr. Meatball, or is that maybe, does that not surprise you?
Yeah, that is a little odd, but I don't think the flow is as one way as maybe we're used to, based on what I've seen. I think it's part of that is that some people are looking at the vol here and looking for, they're not just buying it, they're selling it.
Jonathan, I'm going to go out on a limb and assume you don't spend a lot of your days parsing the day-to-day minutia of VIX options flow, or perhaps you do. Maybe I am mistaking you, sir.
No, you did not mistake me.
That's kind of what I thought. So don't be offended if I don't require you to speak on all things VIX options flow. Let's hit on some of the other ETPs really quick. Then we'll move on to some of your questions. Our old friend VXX, like I mentioned, the erosion kicking back in. We're at around a little bit shy of 42 out there right now, off about half a handle or about 1% right now. Mark, let's change up our game a little bit because everyone, I'm not so sure if you saw the Twitter chain that erupted after the show last week, but everyone was amazed that you guessed this these VXX 10 puts. I guess they don't listen to the show because we do that every week. So they were amazed. They were amazed that you guessed that one. They didn't know that I set you up for that every week. So let's flip the script a little bit. Let's try to guess beyond the top four, let's say the top four open positions of VXX right now. 3 of them are January puts. So let's just strike those from the equation. So the number 4, that's what I'm asking you right now. The number 4 open position in VXX. I'll give you a hint. It is a put. You just kind of guess where and how, what strike.
All right, the number 4 position in VXX. I'm going to go out and I'm going to say it's June. That's my first guess. It's the June 20s.
Not bad. You may or may not have been looking at the show notes. Because
I didn't.
Because you're one strike off. You're one plays off, I should say. The June 20 is a number 5. It is the May 28 put, sir. How dare you miss that one?
That's
everyone's favorite.
Put.
The May 28 put, 57,000 of those bad boys open. So it's all Jan until you get to May, then you get to June. You go 28 and 20. Interesting. So it is all puts out there. About 3.25 million contracts open out there in VXX land. This one kind of interesting. We talk SVXY a lot. We don't really talk its sister product UVXY. Both of them kind of not a really lot of reason to talk about them anymore because they've both kind of been, shall we say, effectively neutered from a volatility perspective. But UVXY, of course, the other side of the SVXY coin out there. Really quickly, Mr. Meatball. It's an interesting one. What would you guess is the number 1 open options position in UVXY?
In UVXY, I'm going to guess we're going to talk January. Regular January. January 2019.
Top 5 all Jan 2019. I'll give you that.
Yeah, no, I'll bet you. I'm going to guess the January 2019. Oh, how about the ones?
Okay, now I know you're looking at the show.
I'm looking at the screen.
There's no rational way. There is no rational way. And that was my test for you because I knew
those are put sales. Those are put sales. Actually, those are not purchases. Believe it or not.
Really, those are sales.
Yes,
that's fantastic. I hope they got $1.05 for those. That would be fantastic.
That would be amazing.
And then everyone would be smiling. Yes, it is, listeners. The Jan 2019 one strike put, 23,000 of those bad boys open out there. See, that's how you test the meatball every now and then. You catch him. You catch him. Once in a while, he reads the show notes, and that's how you know it is. All right, really quickly, we touched on earnings vol a lot already this week. We saw a lot of big names popping off. We got Google. We got Intel, Microsoft, Amazon. We're all moving quite a bit this week. Mark already mentioned what's going on with Amazon. They of the continuous gift that keeps on giving from an upside and from a volatility perspective out there. Microsoft was kind of a mixed bag earlier in the announcement. Today, now they're up about 1%. They were pricing in about 4%, so still anemic. Maybe Microsoft, again, I'm not going to go out on a limb and say that right now because they've been blowing the doors off it lately, but for a while there, they were one of the best premium sales on the street. Maybe those days will return. We shall see. 1 quarter, obviously, way too soon to tell. I'll have to look at some of the data that folks at Orat's crank to see what they think about in terms of recent performances out there in Microsoft versus what they're pricing in. And our old friend Intel, they were pricing in about 5%, and right now they're actually unched right around about $53 or so. So they're pricing about $2.50, and they're pretty much unched. So it looks like a couple of them actually delivering. Google earlier in the week, they were pricing in about 5%, so right around $54 or so. They ended up intraday dropping down as low as about 61. So it ended up working out from a premium buying perspective out there as well. Really quickly, we'll touch on the commodity vol as well. You guys know if you like more commodity volatility, stay tuned. In about 45 minutes, we'll be back with TWIFO This Week in Futures Options, where we'll get into all of that. got a great guest coming on this week to do a deep dive into all things ags. So it's kind of fun. A lot of vol being exhibited out there as well. But let's go far afield, pun intended, on that show, and it's kind of fun. Right now, crude vol coming in a little bit, right about 26 out there, and our old friend, the OIV, the crude VIX. Gold vol right around holding steady. I mean, there's not too much left to be wrung out of gold vol right around. Actually, it's down again. It was at 11.5 coming into today, about 1087 right now, so we're getting back down to those very, very anemic levels. Jonathan, you guys pay attention to a lot of commodity factors or volatility out there. Obviously, I know you're primarily focused on the equity space, but does any of these levels factor in to your analysis when you're looking at the market these days?
I think as a point of reference, yeah. Just to kind of see where the shifts in volatility are. I think on the commodity front, you would kind of expect to see a little more, given Trump, OPEC, commodity inflation, all of those things. But as far as a key factor input, not so much, just more for a point of reference.
You know, it's a key input for us. It is your questions. So let's get to them. It's time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. We got a bunch of questions. As always, we'll see how many we can get to. Really quickly give you an update on our question of the week here, our Twitter poll. We are asking you guys which of these positions you think has the best chance, these kind of ridiculously sizable open options positions, has the best chance of expiring in the money. Right now, it's a tie between our old friend, the VXX Jan 2019 10 puts, about 197,000 of those out there, and the Tesla Jan 2019 50 puts. Both have 32% in our poll. The Jan 2019 200 calls in GLD, the gold calls, those have only about 25%, and only about 11% of you thinking the S&P is going to be cut by roughly a third or so in December 2019. These 2019 SPY 150 puts, only 11% voting for that. Speaking of all things VXX, you guys have it on the brain today. This comes in from Ilir. They're asking, he says, so the VXX Jan 10 puts are worth about 3 cents. Yeah, you're right. They're somewhere about 3 cents at 4 cents, right around it these days. He says, but the VXX2, and he puts in parentheses, or VXXB, I'm not sure which one it's called. He says, but those Jan 10 puts with the exact same strike and days to expiration are worth $2.60. And he puts in parentheses, a one lot just traded this morning. He says, am I missing something? Yeah, look, I just pulled it up here just to I haven't had a chance to look at these, but the VXXB is out there. 41.74 right now versus our old friend VXX, which is at about 41.81. So they're pretty much in lockstep with each other. And it did do a one lot today as well of, I don't know what traded today. Oh, it was May 44 puts. Doing a one lot for $3.50. So they are trading some options out there. Mr. Meatball, you talked about this one before. VXX2 or VXXB. He's got me saying it too. VXXB is kind of the successor, the spin-off product of VXX. Why don't you explain again for our listeners really quickly what the heck this thing is, and then maybe why he's looking at these funky values here for these puts. Are you there, sir? Are you muted?
Yeah, I was muted. I'm sorry. What were you saying?
Ilir wants to know why the heck first off, explain what the heck VXXB is for our audience. And then,
all right. VXXB is, all right. So we've got VXX, which is a note. All right. It's credit. Credit has a day it becomes due, and that is going to be in Jan 2019. So then VXXB is basically the same thing as VXX. It just has a much further expiration date. It goes to that credit is good, I think, out to 2025, something like that. And in addition, when VXX expire, when that note becomes due, VXXB will just become VXX, and then everything, the old VXX disappears, and then we're right back to whence we were. The two should basically be one and the same and are one and the same. And so that is why VXXB exists, and why it's trading the way it is. It has options, but it's not really active yet. As we get to toward January, that'll start to change.
Yeah, he says he sees Jan 10 puts in this, but that doesn't make sense. Obviously, it's only going to go out to December.
That's not VXXB. Regular VXX just goes out to December, and the lowest strike is 28. There is I don't see any 10 puts anywhere in this product.
I don't know what this guy's.
So I think he's looking at regular VXX, and he probably wants. So what's the deal with 10 puts? Somebody was making a bet, hedging off vol dropping, probably. Or they were making a big, huge bet on vol just staying at 9 forever.
Yeah, I'm just trying to see what this guy could possibly be looking at. I don't know where he's seeing 10 puts in VXX that are anywhere close to 260. If you know, let us know, Alir, what you were talking about. At least we got the answer to the first part of your question, the difference between VIX and VXX and VXXB. It does get a little funky with the notes and the terms and everything else out there in a lot of these products. LLC1, easy for me to say, saying, I think the world woke up to a new risk for vol products, issuer panic risk. We all knew it was in the prospectus, but now we've seen it materialize. I wonder how this will affect risk premiums in these products going forward. Yeah, that's been something we've been talking about a lot on the show lately. Jonathan, I'm curious, you haven't been on the show since all this meltdown happened. It's obviously a hot topic in the vol space. I'd be curious to get your thoughts on it these days. These kind of inverse volatility products like XIV and SVXY. XIV, obviously, kind of no more. SVXY, shall we say, a reduced version of its former self. I'm curious, do you have an interest in these products? Did you watch them? And what were your thoughts on kind of the whole controversy that sprung up after the sell-off in February?
It's a fundamental view on them is that a lot of the same associated risks that were highlighted when the 2X and 3X sector ETFs came out, and that, certain people should just, if you can't understand it, you shouldn't be, you're not trading it. This is not an investment. This is a way to capture a very short-term move. So, I would never own one, but that's not to say that you couldn't make money on them.
So it sounds like you're in the camp that they kind of did as advertised, but a lot of people didn't maybe read that advertisement as closely enough, or perhaps some of the brokers didn't do their diligence to really step in there and usher people to the appropriate products out there. But you're right, they did at least what XIV did, as they disclaimed in their prospectus, even if it was buried many pages in. Let's see here. We got time. Let's do one more quick one here. This is Bortega saying, this is what we were talking about before, Mark. This is, why are there no options, he wants to know, on VX APL? Will there ever be options listed on this product? VX APL, if you're not familiar, listeners, this is the Apple VIX. This is part of, I don't know, it's probably about 5 years ago now that SIBO came out and announced they're going to be listing single name VIXs on a lot of the hot products. They did VIX, they did gold, they did a bunch of things out there. And it seemed, I think there was a Google one out there, a few others, and there were 5 of them in total. And it seemed like a great idea. Everyone and their mothers, of course, when Apple was threatening the 700 level and it was the most traded thing on the planet and everyone had to have it and everyone was talking Apple. So a VIX of Apple made total sense. And they disseminated it, put it out, and for a variety of reasons, I've asked them about this a bunch of times, actually, over the intervening years, and it seemed like there are no plans to list out. In fact, there's no, if you look at it, B. Ortega or Bortega here, there's no even tradable product here. It's just an index that they disseminate. It's used for things. I know the folks at Schwab use it for their Idea Hub for premium harvesting and things like that. So the index is used for a variety of things out there, but I think we got to see a tradable Apple VIX before we see options on it, and it doesn't sound like that's happening, unfortunately, anytime soon. Mr. Meatball, you concur, or do you vehemently disagree?
No, I mean, well, these kind of abstract equity products just don't really work very well. Do you remember NASDAQ had their alpha indexes, which was like, picking a stock's performance
SPY
relative
versus
to
Apple and things like that. Yes.
Yeah. So, what I think SIBO did was they saw NASDAQ's utter failure on AVSPY, which should have traded and, just couldn't, and realized that these are pretty abstract. And then add in the fact that they've tried different things that do make some sense, like, gold volatility, oil volatility, RUT volatility, NASDAQ volatility. There have been listed options on all of those, and they have all flopped. There was the VXXT, that flopped. Outside of VIX, the volatility space has pretty much been one big flop, and that is why you will never see these. That's why you'd never see these trade.
Yeah, you're right. It has been kind of surprising to watch the myriad of failed products. VIX has been lightning in a bottle, yet things that you think would be slam dunks, crude VIX, gold VIX, things when these things were moving and shaking, and yet no one wanted to touch them. It's been odd to watch what has worked and what has not in the vol space, and unfortunately, that includes these in single name VIXs, which doesn't seem like they're going to see the light of day, at least from a tradable perspective. And you can see them, watch them, you could use them in your own analysis. They're out there, they're disseminated, have at them. But in terms of trading, not so much. All right, we got to get to it. It's time for our final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And as we're winding up the show here, at around 1575 for the VIX Cash, which is pretty much about a tenth of a point away from where one of the Thompson twins, Mr. Mike Guest, last. He is at 1585, so that counts as pretty much a bullseye in my camp. So our guest takes it last week. I was second place there with looks like a little bit more than that, about a half a handle, 0.6 of a handle away. Mr. Meatball, he was like a point and a half. He wasn't even in the conversation, so we won't include him. Unfortunately, our guest not here to celebrate his victory. So that means our guest this week gets to celebrate in his place. Jonathan, you now have the dubious honor of going first here. This is, of course, our crystal ball segment where we attempt to look ahead into the future and try to divine where that slippery beast known as the VIX Cash will be at exactly this time, the end of the show next week. So not at the close, not at the open, but at 1 p.m. Central, 2 p.m. Eastern, this time next week, sir. It's a challenging thing. What do you got in store for us?
I am going to forecast 15.25.
I like it.
Interesting. Anything you want to share with us as to why that is your pick?
Sure. So, if I'm looking at S&P cash, we're fluttering around 2670. If you were to look at a 6-month or 12-month Fibonacci, or even some of the moving averages, there's not as much on the moving averages, but on the Fib, you would look at like a 6-month chart. I feel like we're gonna maintain this kind of low volume, incremental range bound, and on that for 6 months, it's 83 is a resistance, and on a 1 year, it's 75. So just kind of have another week of kind of dismal volume and kind of float around here and watch the VIX come back in a little bit.
I can certainly see that. Excellent analysis. I love when people come on this show because they see how challenging it is to do that. All the listeners at home have fun listening to us make fools of ourselves, but they see how much analysis goes into this. It's not as easy as it may seem. Of course, you guys are always welcome to play along, send in your guesses as well. You can all be humiliated along with us every week. All right, yeah, I could certainly see how you come to that number, 15.25. I certainly wouldn't be look askance at a level of that next week. I'm going to think, I think my guest last week, I think I went a little bit higher last week than I wanted to because our guest was where I wanted to be. That's what I get for letting the guests go first. But that's the nice kind of guy that I am. That said, I'm going to come in a little bit from my number last week. I'm going to say I was 1635 last week. I think we could be just a little bit, I'm going to say 16.05 for this time next week. Slightly higher than where we are this time next week, but not a ton. All right, Mr. Meatball, I have a feeling I know where you're going to go, but have at it, sir. 12.
Yeah, 12. Let's see. My outlook is my position. Let's say What did I guess last week, Mark?
You guessed 14 and a quarter.
All right. I'm going to guess 14 and a quarter.
Oh, going far out on a limb with that. Poor John, he does a whole treatise on his analysis, and you do the same thing as last week. That's what we expect from our moral center here of the program. All right, listeners, that music, which is kicking on ever so slowly, there it is. That music means it's time to unfortunately bring to a close this epic journey through the world of volatility. If you want more vol talk and everything else, stay tuned. We'll be back in about 27 minutes if you're listening live to do a whole bunch of TWIFO, get into a lot of the commodities, the volatility out there, the skew, all that cool stuff. So stay tuned for that in a little bit. Unfortunately, though, that's the end of Vol Views. But before we go, let me go back around the horn really quickly, starting with our guest, and see what they have cooking that may interest you. Jonathan, we kind of talked at the top of the show about all the different products you guys have over there in the Horizons ETFs family. If our listeners are interested, they want to learn more, or perhaps you want to leave them with a hint for any new products you have coming up, now is the time, sir. The floor is yours.
Sure. So we have a couple of new products coming out later in the year. One is going to be a 30 Delta buy right on the Russell 2000. That ticker symbol will be RUSY.
There you go. And if listeners want to learn more about all these Horizons products, where should they go? What should they do?
You can learn all about our products at horizonsetfsus.com.
Horizonsetfsus.com. Don't forget the S in there to learn more for yourself about the buy rights and the collars and all the other interesting stuff they have going on. I'm telling you, it is slim pickings in the ETF options world when it comes to options-oriented type ETFs and implement things like covered calls and things. So Horizons got you covered out there in a pretty relatively sparse landscape. And Mr. Meatball, if I'm interested in learning more about all this volatility stuff, or perhaps actually contacting a fund to do it for me, where should I go? What should I do?
All right. Well, if you're an accredited investor, you can reach out to me, Mark, at CarmelineCapital.com, and we can talk about a smarter way to belong the S&P 500. If you're interested in options, let's plug my book. We haven't talked about that in a while. My second book, Trading Options for Edge, is currently available on Amazon and on, you name it. This is not something that was ghostwritten. I spent, a couple of years working on it. My wife can attest that writing that thing was miserable, but the end result is a really, really, really good options book. And so if you're listening to this show, you will find value in that book.
There you go. Trading Options for Edge. Search for it over there on Amazon, or perhaps go to your local bookstore and check it out. It might keep them in business. Why not? And of course, Carman Lines with a K, Karman line to check it out. And on behalf of Mark and Jonathan and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing. If you're listening live, take a break, go to the bathroom, get a beverage. We'll see you back here in about 25 minutes for TWIFO. If you're listening after the fact on the old podcast, we love you guys too. And we'll see you next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.